What's going on, guys? It is Wednesday, hump day, and the only thing getting humped today is the crypto market. We have a few things that we need to talk about today. Not yet. Let's go ahead and get started. So let's take a look at the market. We have here Coin360, which is a cryptocurrency prices heat map. I don't think I should have to explain the color theme here. Bitcoin not having that great of a day. It's down 2.6%. Ethereum down 5%. Solana is down 6%, Polkadot down 7%. They're all having a bad day. Cardano seems to be having a bad month, is down 9%. You know, what's holding up the entire cryptocurrency market right now? It's a little dog meme coin that will not be named until later in my video because that's exactly where it belongs. And yes, I did make that. All right, let me go ahead and explain why you see so much red on this screen. You need to know two different things. The first thing is that Bitcoin is daddy. All right, take a look at this market dominance. 46% of the cryptocurrency market is Bitcoin. So that means that everything else could be having a green day. It could be all roses and sunshine. And then Bitcoin wakes up and takes a dump. And it doesn't do so quietly, okay? It wakes up, takes a dump. It throws a temper tantrum. It wakes everybody else up, lets them know that it took a dump, ruins their day, and now there's an entire chain reaction of pants pooping. And that's exactly what we saw the last 24 hours. Okay, Bitcoin leads the market. All the other coins, they tend to move upwards when Bitcoin's either moving sideways or sometimes when it moves upwards. But if Bitcoin's having a bad day, for the most part, everything else is having a bad day, except for that one little dog meme coin that I am not going to name yet because it seems to defy gravity. All right, so the second thing that you need to know is that not everything moves in a straight line. Let's take a look at the Bitcoin price action. If you were to zoom out, it's always good to do that every now and then. Kind of does look more or less like a straight line, especially if you look at the logarithmic scale, which adjusts better for higher time frames. Well, let's go back and look at the 1 year chart for Bitcoin. 1 year ago, we were at 13,000. Okay, I don't know if you've ever seen a graph or not, but from 13,000 all the way to where we're at right now, 59,000, that is not a straight line. Plenty of peaks and valleys along the way. Like here in January 9th, we had a double top, 40,000, down to a valley of 30,000. And here it's a lot of chop again. And here we are at 58,000 peak in May. And this one was especially devastating because we hit a valley of 29,000. We recovered nicely. And our local top, which was the most recent top, it was 66,000. Now we're at 59. I wouldn't be surprised to see Bitcoin hit a price of $52,000 or so. That's the next level of support if it were to keep going down. So these dips or these corrections, they're a necessity. Okay, and they're occurring as a result of greed and speculation. So allow me to explain a little bit. Let's say that you are in spot. Okay, that means that you're holding the asset, you're holding Bitcoin. All right, if you're in spot, that means that let's say you have one Bitcoin, that means that you have that one Bitcoin, it's worth 59,000 today. The price could go up to 70,000, it could go back down to 40 and then back up to 80. Doesn't matter, you're still holding one Bitcoin unless you decide you want to sell somewhere along that roller coaster. What a lot of people are doing right now is they are saying, you know what, spot isn't enough for me. I want to go ahead and leverage my position. They turn to derivatives, something like futures, options, leverage trading. Just to give you an example, leverage trading is you have that one Bitcoin and you decide, you know what, this isn't enough for me. You deposit it into an exchange somewhere. Let's say you go with 10 times leverage. You now have the buying power of 10 Bitcoin. And you open up a position at 10 times leverage and you either go long, assuming that the price is going to go up for Bitcoin, or you go short, saying the price is going to go down. So it's increased rewards, increased risk. If your price prediction is correct, you choose long and the price continues going up, you're going to get 10 times the amount of rewards that you would if you had just held spot. And that's great. But if it moves in the wrong direction, a 10% move in the wrong direction from your price prediction means that you're margin called and that you are liquidated. And when you're liquidated, you lose your one Bitcoin that you deposited. Now imagine that some of these exchanges, they don't offer just 10 times leverage. They offer 100, 125 times leverage. Quick sneak peek, I actually have a crazy story from my earlier crypto days about leverage trading. I will talk in a different episode about that. Okay, but for right now, I just need to point out, what am I getting at here? When Daddy Bitcoin takes off, everyone runs straight to leverage. Leverage is not great for the long-term health of the market. So we have these angels. They're called Bitcoin whales. And every now and then they decide to actively hunt for different levels of liquidation to clear the markets. They flush out leverage positions. Crypto and stock market too is a zero-sum game. So the more leverage that they can flush out, it's actually better for the markets. Their whole reason for doing so is basically to earn more Bitcoin for themselves. They can earn a larger market share of Bitcoin, and it helps them in the long run. So the beauty of blockchain is that everything is on chain, all the transactions, which means that the liquidations are on chain. So what does it look like when you take a look at how many liquidations there were? This is Bybit, great source for seeing this information. It shows all of the chains and all of the corresponding liquidations for each chain. Let's look at Bitcoin. September 6th in particular was a pretty tragic day. $3.2 billion in longs were liquidated. $360 million in shorts were liquidated. What happened recently? October 26th, we had almost $1 billion of total liquidation. Okay, this occurs every now and then whenever people get greedy. How greedy are people right now? Same source, Bybit. This is all of the open interest for Bitcoin right now. As you can see, it's relatively low, only a couple $1 billion. Back in August of 2020, we were dealing with a slow market. It reached its peak right before May, right before that huge decline. And here we are in October. So a total of almost $15 billion in open interest. Those angels, those Bitcoin whales, they want to liquidate those individuals. Because this happens every time. When Daddy Bitcoin takes off, everyone runs straight to leverage. And leverage, like I said, is not great for the long-term health of the market. So let me say this. I don't think that this bull run is over by a long shot. What you're seeing here is over-leveraged positions being washed out. The question that we need to consider for Bitcoin is, are these whales finished washing out this leverage, or are we going to go even lower to wipe out this almost $15 billion in open interest? I mean, that's the question of the day for Bitcoin. So be prepared for us to go even lower, $52,000. If it goes lower than that, then you're going to see a lot of this open interest wiped out, and then we can continue our run back up towards six-figure Bitcoin. Now, these two pages I just showed you are nothing more than tools. They're not completely deterministic. They can't tell the future. These are things that we use, in order to try to determine what our strategy is going to be moving forward with Bitcoin. It could go up, it could go down. This is another tool, again, not deterministic, but this helps us in determining what the possibilities and probabilities are for the price movement for Bitcoin moving forward. Here we are in 2021, and what this is the Bitcoin monthly returns. Another tool that's on Bybit. Bybit's a great website. It's a free website, by the way. This is the monthly returns for Bitcoin. Obviously, we haven't hit November or December yet, but if you were to take a look at most of the Novembers for nearly every year over the last 9 years, nearly everyone is green, especially when the Octobers are green. October, we're up 34% so far, according to this price chart. What I'm looking at is a green November. What I'm looking at is a 50-50 December. I'll probably know more information after we're in November about what's going to happen in December. But this run is going to continue. At this point, it's just a matter of how much we're going to correct. All right, it is time to talk about that little dog meme coin that I didn't mention earlier. And it's actually up 152 million% on the year, which is crazy. That is Shiba Inu. I had a couple of friends text me and message me asking me what are my thoughts on this coin. Here they are. First of all, I learned a long time ago never to dismiss meme coins. The cultural pool of meme coins is absolutely massive. Not only that, but it's a little cute dog. People are going to invest in that. The second thing is that Shiba Inu has the benefit of unit bias. Look at the price. It's fractions of a penny. Okay, so if I'm, some young kid thinking of getting into cryptocurrencies, and I'm trying to decide between investing $500 in Bitcoin or Shiba Inu, my $500 is going to get me less than 0.01 Bitcoin. There's nothing sexy about that. There is no flex in that. You look down at your wallet that's in your phone, you see less than 0.01. How do you feel? Compare that with Shiba Inu. Your same $500 can get you like 50 quadrillion coins, And now, even though it's still $500, you're walking around feeling like Jeff Bezos. Okay, there are a lot of psychological factors that are at play here. Now, that's not to say that you can't make a bunch of money investing in Shiba Inu. My main concern here is that these dog meme coins tend to mark the top of the crypto market. Think back in April when Dogecoin had that huge run up. Saturday Night Live, Elon, May 9th, and after that it was a disaster. It went down, it brought the entire cryptocurrency market down with it. It's not the first time it happened, and so for that reason, I'm just a little bit weary here at the price action over the last couple of days, over the last week with Shiba. Anybody that's made money on it, great. I just have a completely different strategy when it comes to these meme coins, okay? And I will mention that when it's time for me to mention that. Now, I don't want to get too dark here talking about the top of cryptocurrency markets and all that bad stuff. But I do want to move on to something that is a little bit more grim, and that is Janet Yellen. For those of you who don't know, she's the Secretary of Treasury. Okay, and I don't want to take anything that she's saying out of context, but this pretty much sums up her appearance on the TV show State of the Union.
Well, I think what's under consideration is a proposal that Senator Wyden and the Senate Finance Committee have been looking at that would impose a tax on unrealized capital gains on liquid assets held by extremely wealthy individuals, billionaires. I wouldn't call that a wealth tax, but it would help get at capital gains, which are an extraordinarily large part of the incomes of the wealthiest individuals. And right now, escape taxation until they're realized, and often they're unrealized, and at death benefit from so-called step-up of basis. So it's not a wealth tax, but a tax on unrealized capital gains of exceptionally wealthy individuals.
All right, so let's go ahead and visualize what this looks like. And this is just an example, but let's say you buy a home for $200,000 and you buy it at just the right time. You've saved up for 5 years, you worked your butt off, $200,000 home, and a year later it's worth $250,000. The way that it works right now, you would pay taxes, you pay higher taxes for the property tax if you're in the United States, but you're not paying further taxes on that home until you decide that you want to move away, that you want to sell it. Unrealized gains means that you're paying the taxes on that $50,000 appreciation, regardless of if you decide that you want to sell that home or not. I want to point out that I am acutely aware of the fact that this bill is targeting billionaires. Okay, but my main issue with this bill, aside from the whole constitutionality part of it, is that we have seen this movie before. This is being presented as a part of the Eat the Rich movement. And for that reason, I expect it to be really popular with a lot of people. But it is not going to stay that way because taxes rarely ever stay temporary. And almost every single time, given a certain amount of time that passes, they affect the people that are not even targeted in the first place. So the first time that we did this was back in the Civil War. Okay, we went ahead and implemented a temporary tax, and it became a permanent one. And then we did it in 1932 with the Revenue Act. And then again during World War II. So at the state, federal, local level, doesn't matter. This is very common. As taxes are levied under one set of circumstances, that set of circumstances almost always changes. Now, I passed my collegiate logic and reasoning course. So I'm aware of the fact that people are going to say that, this is a fallacy and that we're only targeting the billionaires and it's not going to go to the rest of us, the middle class. But it has almost never stayed that way. And if you sit there and watch something happen over and over again, you eventually have to call it for what it is. This is a way to invent a new tax that will eventually touch all of us. Well, not to end this episode on that bucket of rainbows, I have two other things I want to talk about real quick. First is a couple of episodes I have coming up. I want to talk about how to buy crypto and where to store it, how to set up a hardware wallet, how to keep your passphrase safe and all of that. And the other thing is going to be just general security practices in order to safeguard your funds. Okay, and the last thing is a little bit of motivation for all of you. It's a quote that one of my life mentors gave me forever ago that has stuck with me. And that is, work so hard that you no longer have to introduce yourself. That's something I'm working for every single day, and I just want to pass on all of you. So that's all I have for you guys, and I hope you guys have a beautiful rest of your Wednesday, even though this is clearly going to get uploaded on Thursday because I'm working so late on it. And I look forward to the next video. Peace.